Welcome back to the Deep Dive. A lot of you have been asking us to dig into some of Cathie Wood's recent stock purchases.
Yeah, seems like everyone wants to know what she's up to.
Right. So we're diving into the world of Ark Invest, and we found this Motley Fool piece that really breaks things down nicely.
Cool.
Yeah, it's a good one. It focuses specifically on 3 stocks she bought earlier this week: Amazon, Iridium, and Datadog.
Okay, I'm familiar with those companies, at least on a high level. What stood out?
What's fascinating is they're all so different, but they actually point to a larger trend we're seeing in her investment strategy. She's finding value where others just see risk.
That's classic Cathie Wood, though, isn't it? I mean, she's always been known for being bullish on these disruptive technologies, even before they hit the mainstream.
Exactly. And even though she had a relatively quiet start to the week, these 3 purchases really jump out. Let's start with Amazon. The Motley Fool calls it a magnificent 7 workhorse.
Workhorse, I like that.
Meaning it's one of the top performing stocks in the market, and it just hit an all-time high.
Wow, all-time high. I feel like I've been hearing about Amazon forever. That's pretty impressive.
Right. But here's where it gets interesting. The article also points out that Amazon's core e-commerce business hasn't cracked 12% growth in like 3 years.
Oh, wow. So that's actually a significant slowdown for a company that used to be synonymous with just like crazy expansion.
Right. It's almost like there are 2 different stories playing out with Amazon simultaneously.
Totally. On one hand, you've got this mature e-commerce giant, facing more competition and slower growth. But on the other hand, you have this super forward-looking company that's pouring money into things like AI.
Exactly. And speaking of AI, let's talk about Amazon's recent investment in Anthropic.
Okay, yeah, Anthropic. I've been hearing that name more and more.
It was an $8 billion stake that is now worth, get its $14 billion.
Whoa. That's more than a double.
I know, right? And they just completed another funding round, raising $3.5 billion, way more than anyone expected.
Okay, so that's huge. And that tells you that investors are definitely seeing the potential of Anthropic and, I guess by extension, Amazon's vision.
Exactly. And this isn't about Amazon just jumping on the AI bandwagon.
Right. This is them trying to position themselves as like the leader in this emerging field. It's almost like they're saying AI is going to be as big of a deal as the internet was.
And this is where Cathie Wood comes in. Amazon stock recently dropped 12% from its peak, and she saw that dip as a prime buying opportunity.
Oh, so she's buying the dip. Classic.
Right. It's like she's seeing past the current market trends and just betting on the future of Amazon's AI ventures.
Okay, so that makes sense. But it does raise an interesting question about her strategy overall. Is she in it for short-term gains, or is she playing the long game?
I think with Amazon, it seems pretty clear she's betting on the company's long-term potential.
Agreed. Okay, so we've talked about Amazon. What about Iridium? Completely different company.
Oh, yeah, totally. Iridium is a whole different animal. They provide data and voice satellite communications.
Right, so that's a pretty niche market.
Very niche. But here's a fun fact. Iridium is the only Lasquoy stock on Cathie's list that's trading higher now than it was at the start of the year.
That is interesting, especially with all the market volatility we've been seeing.
Right. But there's a catch. It's still down over 20% from its peak at the beginning of last year.
Okay, so why is that?
Well, Iridium is known for slow but steady growth, driven by a consistent increase in its subscriber base. It's not about explosive growth for them.
So it's about reliability and steady expansion, which raises a good question for all of us. In today's market, is slow and steady enough to win? Or do you really need those high-growth companies to see big returns? It's a real dilemma for investors.
It's the choosing between the tortoise and the hare.
Yeah, exactly. Do you go for the slow and steady company that might offer more stability, or do you take a chance on the high-growth company that could either skyrocket or completely crash and burn?
It looks like Cathie Wood is playing both sides of that field, which is interesting. All right, last but not least, let's talk about Datadog.
Okay, Datadog.
They offer cloud monitoring as a service, which is so crucial these days with everyone moving to the cloud.
Yeah, they're basically like the guardians of the cloud, making sure everything runs smoothly for businesses.
Right, and they've been really successful. Their stock has tripled since its 2019 IPO. But...
oh, there's a but.
There's a but. Datadog has actually had a pretty rough 2025 so far, dropping 18% in value. And get this, most of that decline happened in just 7 trading days.
Ouch. So what happened? Did they have some sort of major setback or something?
Well, they released their financial results, and while their revenue growth was decent, their guidance for future earnings was less optimistic.
So basically, investors hit the panic button, driving the stock price down.
Exactly. But guess what? Cathie Wood saw it differently.
Let me guess she saw it as another buying opportunity.
You got it. She's betting that Datadog will overcome these short-term challenges and continue to grow with the expanding cloud computing market.
Okay. So do you think she's right to be so bullish, or is this maybe a sign of trouble for Datadog?
Well, to answer that, I think we need to take a closer look at Datadog's position in the cloud computing market and analyze Cathie Wood's rationale a bit more.
Sounds like a plan.
So we'll do all of that in the next part of our deep dive. We'll unpack Datadog's position, analyze Cathie Wood's strategy, and really explore whether following her lead on this one is a good idea.
Welcome back. Before we jump into all the details about Datadog and why Cathie Wood is so bullish on them, I think it's worth taking a step back.
Okay, yeah, good idea.
And just looking at the bigger picture here, we've got these three very different companies, right?
Yeah, we've got Amazon, which is this huge e-commerce company. Then there's Iridium, the satellite communications company, and then Datadog, which is focused on cloud monitoring.
Exactly. So on the surface, they seem completely unrelated, but I think there's a common thread here, and I think it has to do with Cathie Wood's long-term vision.
So you're saying she's not just chasing short-term gains?
Right. She's looking beyond the immediate market trends, and she's placing her bets on what she thinks the future is going to look like.
So she's playing the long game, which is pretty bold in today's market where it seems like everyone's obsessed with instant results.
Totally. And it takes a deep understanding of the technologies and the forces that are shaping the market, but I think that's what sets her apart. Okay, so let's talk about Datadog.
Okay, yeah, let's dive in.
You mentioned that they offer cloud monitoring as a service, which is becoming absolutely essential in today's world.
Right. I mean, they're basically the guardians of the cloud, right? They're making sure everything runs smoothly for all these businesses that rely on cloud computing.
Exactly. And that sector is only getting bigger.
Oh, yeah, it's booming.
I mean, more and more companies are moving their operations to the cloud, which means the demand for cloud monitoring is just going to keep growing.
So that makes sense.
Okay.
But then why is Datadog facing challenges? I mean, their stock dropped recently, which suggests something isn't quite right.
Okay, that's a good point. It's not just about the overall growth of the sector, but also how individual companies are doing within that sector.
Okay, so what's going on with Datadog specifically then?
Well, their recent dip was triggered by their financial results. Their revenue growth was decent, but what really spooked investors was their guidance for future earnings.
Oh, so it wasn't as optimistic as people were hoping for.
Exactly. And when that happens, investors tend to panic. And that's what drove the stock price down.
So everyone thought, oh no, Datadog's growth is slowing down. But Cathie Wood saw it differently.
Right. She's like, this is a buying opportunity.
Exactly. She thinks Datadog will bounce back from these short-term hiccups and continue to grow as cloud computing takes over the world.
So it's like she's saying, don't panic. This is just a temporary setback.
Right. But is that a risky bet? I mean, the cloud computing market is super competitive these days.
Oh, absolutely. You've got giants like Amazon and Microsoft all vying for dominance.
Right. So where does Datadog sit in?
Well, they've managed to carve out a really strong position for themselves. They've got a good reputation, a loyal customer base, and a track record of innovation. So they're not just some fly-by-night operation.
So do you think Cathie Wood is right to be so bullish on them? Or is she being overly optimistic?
That's the million-dollar question, isn't it? I think it's definitely a calculated risk. She's not just throwing money at the problem. She's clearly done her research, and she believes Datadog has the potential to deliver big returns in the long run.
So it's about looking past the short-term noise and focusing on the fundamentals.
Exactly. And that's a lesson we can all apply to our own investing decisions. Don't get caught up in the hype or the panic. Do your homework and make informed choices.
That's great advice. Okay, so let's circle back to something we touched on earlier.
Yeah.
This idea of Cathie Wood doubling down on her convictions. We saw it with Tesla, and now we're seeing it with these three companies.
Yeah, that's definitely a pattern with her. It's a high-stakes strategy for sure.
Oh, definitely.
But I think for her, it comes down to believing in her research and her ability to pick winners.
So she's not just betting on the companies, she's betting on her own judgment.
Exactly. And it's worth noting that her track record with this approach is mixed.
Meaning sometimes it works and sometimes it doesn't.
Right. I mean, there have been times when her doubling down has paid off big time, but there have also been cases where it hasn't worked out so well. Investing is always a gamble, even when you've got someone as smart as Cathie Wood at the helm.
So what are the risks and rewards of this approach then? It seems like it requires a lot of confidence, not just in the companies, but in yourself.
Absolutely. I think one of the biggest risks is confirmation bias. You get so convinced that your initial assessment was correct that you start ignoring any evidence that might suggest otherwise.
So you basically become blind to the red flags.
Exactly. And that can be really dangerous, especially when you've already put a lot of time and money into something.
So you have to be willing to admit when you're wrong.
And cut your losses. Don't hold on to a losing position just because you're emotionally attached to it.
That's a tough one.
It is, but on the flip side, the potential reward of doubling down is that you can multiply your gains if you're right. So it's a trade-off. High risk, high reward.
It's about having the courage of your convictions, but also knowing when to fold.
Exactly. And that's what makes investing so interesting. It's not just about numbers. It's about psychology, strategy, risk management. It's a whole game.
Okay, so speaking of risk management, let's talk about diversification. Cathie Wood is known for making these concentrated bets on disruptive technologies.
Right.
But it seems like she also understands the importance of not putting all her eggs in one basket.
Oh, for sure. Her portfolio is definitely more concentrated than a typical index fund, but she's not just betting on one sector or industry.
So she's spreading her bets across different areas that she thinks represent the future.
Exactly. She's got investments in AI, robotics, genomics, fintech, all sorts of things. But within those areas, she's not afraid to make big bets on the companies she thinks are going to change the game.
So she's diversifying across themes, but within those themes, she's making these concentrated bets.
Right. And again, that comes with risks and rewards. If those companies take off, she stands to make a killing. But if they flop, she could lose big.
It's a balancing act, trying to find that sweet spot between conviction and diversification.
Exactly. You want to have a portfolio of companies that you truly believe in, but you also want to spread your risk around a bit. And there's no magic formula for finding that balance. It depends on your own personal risk tolerance, your goals, your time horizon.
So how can people listening to this apply these principles to their own investment decisions? What are some takeaways from Cathie Wood's approach that they can actually use?
I think one of the most important lessons is to think long-term. Don't get distracted by the day-to-day ups and downs of the market. Instead, focus on finding companies that are solving big problems and building for the future.
So don't chase the latest hot stock tip.
Right. Look for companies that are building sustainable businesses that have the potential to grow over time. And don't be afraid to be contrarian. Cathie Wood isn't afraid to go against the grain and invest in companies that other people are overlooking.
It's about trusting your own research and your own judgment.
Exactly. But that doesn't mean blindly following Cathie Wood or anyone else. You need to do your own due diligence, understand the risks, and make informed decisions. And finally, I think one of the most important things to remember is to keep learning and adapting. The world of investing is constantly changing, so you need to be willing to adjust your strategies as new information comes to light.
So be a lifelong learner.
Exactly. Read books, listen to podcasts, attend webinars, stay curious. The best investors are the ones who are always learning and questioning their assumptions. It's not a static process, it's a journey.
Well said. So it sounds like investing is more than just picking stocks.
Oh, absolutely. It's about understanding yourself, your goals, your risk tolerance, and then it's about finding a strategy that aligns with all of that and being willing to adapt along the way.
Welcome back to the Deep Dive. So we've covered a lot of ground today, haven't we?
Yeah, we have. We talked about Cathie Wood's latest stock picks, Amazon, Iridium, and Datadog, and we even dug into her overall investment style, focusing on long-term growth, her willingness to take risks, and her belief in all these disruptive technologies.
Right. It's been fascinating. So now let's get down to brass tacks. What can our listeners actually take away from all of this and apply to their own portfolios?
Okay, well, I think one of the biggest lessons here is the importance of research. Cathie Wood doesn't just throw money at any company that sounds cool.
Yeah, she's not just chasing hype.
Exactly. She really delves deep into these companies. She figures out how they make money, who their competitors are, and what their long-term growth potential looks like.
So do your homework. Don't just read headlines or follow the crowd. Really dig into the data.
Right. Read industry reports, talk to experts. The more you know, the better your decisions will be. Another thing we talked about was the importance of thinking long-term. Cathie Wood isn't trying to make a quick buck.
Yeah, she's in it for the long haul.
She's looking for companies that are going to be winners 5, 10, even 20 years down the road. And that means being patient and riding out the inevitable ups and downs of the market.
So don't panic when things get bumpy.
Exactly. Just stay focused on the fundamentals. And speaking of fundamentals, remember diversification. Even though Cathie Wood makes these big, concentrated bets, she still understands the importance of spreading her risk around.
Right. Don't put all your eggs in one basket, as they say.
Exactly. Explore different asset classes, look at growth stocks and value stocks, think about investing in different parts of the world. A well-diversified portfolio can help you sleep better at night. And finally, remember, the world of investing is constantly changing.
Yeah, it's a fast-moving landscape.
So you got to stay informed and be willing to adapt. Read books, listen to podcasts, take some courses, whatever it takes to stay ahead of the curve.
Be a lifelong learner. So much great advice. As we wrap up, is there one final nugget of wisdom you'd leave our listeners with?
I think the most important thing is to develop your own investment philosophy. Don't just blindly copy Cathie Wood or anyone else.
Yeah, figure out what works for you.
Exactly. What's your risk tolerance? What are your goals? What's your time horizon? Once you know the answers to those questions, you can start crafting a strategy that fits your unique needs.
So investing is a personal journey.
Absolutely. There's no one-size-fits-all approach. The key is to find what works best for you and to stay committed to your goals.
That's great advice. Well, thank you for joining us on this deep dive into Cathie Wood's investment strategy.
My pleasure. It's always fun to talk about investing.
Absolutely. And to all of you listening out there, remember, the world of investing is full of possibilities. So stay curious, stay informed, and never stop exploring.